POS tracking template, how to use the POS tracking template for every transaction that occur in your POS business. So we head over to the template, you click on it for it to get open from my drive. So let's see. Yes, it's opening, as you can see. So it has opened. So let's analyze the template first. Now you see each column. The first column there, we have serial number that keeps record of how many transactions you've done for the day. The second column, we have receipt number for the POS transaction receipt number. You record it there. Transaction type. Under the transaction type, see opening balance actual. Under this transaction type, you can use this column to record all forms of transaction, from transfer, that is deposit, to withdrawals and other forms of transaction. Now look at this other column. You have in-out balance or cash. In-out balance. This means when money comes in, you record it. When money comes to your POS business, people bring cash, you record it in this in section. Then if you're paying out cash, you record it in the out section. Then the balance after those transactions. The same thing applies to money points, in-out balance. The same thing applies to Kudi, as you can see here, in-out balance. The same thing applies to Momo, to Sterling, and we have the total of all banks. The total of all banks. Now, this total of all banks, it tracks all the transactions that happen in your Sterling Bank, your money point, your Momo, your Kudi, and your money point account. The accumulation of all these balances and the accumulation of all the transactions will be reflected in the total of all banks. The last section here will capture commission statements. Now, in this particular statement, you use it to track the commission you've earned for that day, less bank charge. Your net commission is what you track. To get this right, you need to make 2 entries. If these 2 entries happen on that particular day, if there's an additional capital, you record it in the green section where you have amount, the green box. If you have an additional capital, that is money comes to you bring an added money to your POS business that particular day, either by cash or through bank transfer. You record it in that section. If there's an added capital to your POS business, you put it there. Then if you withdraw bulk money from your POS business for other activities, let's say on that day your total POS business capital was 500,000, then you removed, like, let's say 50,000 or 100,000 out of the business for another activity, or you borrowed it or gave it to someone else as drawing. That is no longer part of the money for the business. You record it to reduce your capital. You record it under that section. So these are the only 2 entries. So this is this for this video. In the next section of this video, we'll be talking about how to make entries. We'll be taking a practical of how to make entries into this particular template that you are now seeing as a POS tracking template. Alright, so in this video, I'll be showing you how to use the POS transaction tracking template, and we'll be making use of cash and money point section alone. Now, let's say day 1, you started your POS business and your POS cash that day, the money you brought, opening cash was 50,000. You enter the 50,000 here. That's it. Then in your money point account, your POS opening balance for that day is 10,000. You enter the 10,000 here. That's that. First transaction for the day, a customer came, let's say a customer came and make a withdrawal. Customer came to make withdrawal, WD. Is withdrawing the sum of 10,000 naira. Person gave you his debit card and said deduct the commission as well, the bank charge. You deduct, when you process the transaction, 10,300 is going to leave the person's account to your money point account. So that's money in for you. Why cash out for you? You pay the person the sum of 10,000. You enter it in this column. Transaction 1, let's say this one is bearing receipt number 103. Okay. Transaction 2, a withdrawal, the sum is 5,000 naira. The sum is 5,000 naira. Transaction 2, the sum is 5,000 naira, and is withdrawal. And this time around, the person made a transfer, including the commission, bank charge, to your POS machine. The sum of 5,200, it transferred to your POS machine, and you're going to pay 5,000 naira as cash. That settles that. Okay. This can come out with 104 receipt number. It's not compulsory to keep the receipt number anyway. All right. Transaction 3. This time the person is withdrawing the sum of 10,000 naira, and the person said, "Do not deduct the commission. I'm going to pay you the service charge for this transaction." The person gives you his card. You withdraw the sum of 10,000. 10,000 enters your POS wallet, and you pay the sum of 10,000 naira as cash to the customer. Cash 10,000, and the person gives you commission of 300 naira as cash. So that's money in 300 naira, and we can call this 105 receipt or receipt number 105. Then the next transaction, the customer came to make a transfer, that is to make a deposit to either his bank account or someone's bank account. This time around, the person brought cash, so transfer or deposit can be called TF. The person brought the sum of, let's say, 15,000 naira, and you said your charge for processing this transfer is 200. So the person gives you 15,200 naira, and you process this transaction, which means the sum of 15,000 will leave your money point account, having done the transfer for the customer. That's money out for you. So that is that, and we can call this 106. Yeah, 106. And next transaction is a withdrawal. A withdrawal. This time the person is withdrawing. Let's say is withdrawing the sum of 10,000. The customer is withdrawing the sum of 10,000, and he made a transfer to your account as well. Okay, the person transferred 10,000 to you, and having received this money, you have to pay cash. And the person did not tell you about the commission. He said he got the commission anyway. He said so. Okay, so you pay the person 9,700, excluding the commission which you deducted. 97, and this can be 107. Yes. In next transaction, the customer wants to withdraw the sum of 30,000 naira. The sum of 30,000 naira as cash. All right, he gives you his debit card and you process it. Let's say you agree to charge him 900 naira. Both of you reached the agreement that your service charge is 900. So you'll be processing 30,900 naira. That's what will enter your money point account, and the cash payable to the customer will be 30,000 naira. Now at this point, your cash balance has reduced to 800 naira, and we can call this transaction number 108. And customers are still coming. You need to make transaction, but there is no cash, so you needed cash quickly, and you sent for cash. So additional money was brought to be added to your business for that day from an external source that was not captured. The sum of 50,000 naira. You call this capital or added capital. The sum of 50,000 naira as cash. Yes, that has increased your balance in cash. And next, having gotten this money, the sum of this 50,000 naira, somebody came to make a withdrawal. Someone came to make a withdrawal. Let's say a withdrawal of 20,000. A withdrawal of 20,000. Okay. Person gave you his card. You process transaction 20,000. Let's say 20,600 naira. That was your charge. And your money goes out of your account. You pay the person the sum of 20,000 naira. Okay, and we can call this transaction number 109. Yes. Now during the day, let's say you bought food. You can call this food and refreshments, or just say refreshments. Refreshments. This cost you 500 naira. You are very careful with spending, or it's a POS business. You need to be careful. You spend 500 naira for food, and your to and fro transport for the day. The transport to and fro. Let's say 300 naira, 150 naira. So you have 300 naira you spent on transport. So we have to close these accounts. So at the end of the day, you close your accounts. Now, take notes. In your closing account, we have closing balance actual and bank charge. Your closing balance actual is the money, the physical cash you have counted that is with you at the close of the business day. So that physical cash must correspond with the calculated balance that is showing boldly. All these ones that are showing in line 30,000 naira. So your calculated balance showing on your POS transaction template should correspond or must correspond with the physical cash of 30,000 naira. So that closes this section. Now we come to your money point section. The money point section, your calculated balance, which is showing 82,000 naira, the difference between it and your bank charge will represent your closing balance actual. In other words, your closing balance actual, the difference between your closing balance actual and your calculated balance will be represented by bank charge. So your POS machine on that day, when you check it, you find out that your balance actual in your POS is reading 81,800 naira. Yes, you enter that. So your bank charge is going to be 200 naira. As you can see, bank charge 200 naira. Now let's come to this last section. Since we did not use all of these other banks, you find out that what you have in your money point section is corresponding with your total of all banks. That's it, as you can see. Yeah. Okay, so let's come to your commission statement. Your commission statement. In your commission statement here, in this statement, you have to make two entries only. If there is an additional capital, since we have an additional capital of 50,000, as you're closing this account, you make that entry here as well. 50,000. There is no cash withdrawn from the business for other activities. That is less drawing. So since there is none, we're not going to make that entries. Now, having done that entries, you'll find out that your net commission is 1,500 naira for the day, having less bank charge of 200 naira, while your gross commission is 1,700 naira. So with this commission statement, you can actually pull out 1,500 as your net commission from the business and put into another savings account, if you want to do that, because you've been able to track and know your commission for the day, So this is how you do it. Now, with these templates, assuming there's a particular transaction that did not drop, it will be reflected in your POS balance. There's a particular transaction that did not drop. Perhaps you made a transfer and the money has not dropped, it means that this your balance will be having an excess. It will not be showing what it is showing now. So this template can actually help you to know in real time what your balance should be, and it will not also make you lose money to customers who are trying to pressurizing you to pay them when transactions are not yet completed. With this, you can also track people who work with you as well. People who work with you, your employee, sales girl or sales boy, to come and handle your POS. Even if you're not there, you send this template to them. As I'm making entries, you can be seeing it in real time. This template is designed in a cloud-based tool. It is designed in a cloud-based tool. This is Google Sheets. So with these, you can collaborate, you can work, you can monitor all your POS centers from every angle. If you have up to like 5 POS points, terminals in different places with this template, you can actually monitor them. So if you want something like this, you can reach out to me so I can build a custom made for you so that money will no longer miss in your business, and you will also be tracking your commission and everything that relates to your POS business. If you're not keeping records like this, then most definitely you'll be losing money in that particular POS transaction business. So learn how to grow your business by measuring the business very well using a tool like this. If you have any other question to ask, please come to the comment section. If you also need this, you can as well come to the comment section. Thanks for watching, and bye.